Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel L. Connon, along with Brianna Valesky, and we have Serge Berger on the line. He's head trader and investment strategist at the Steady Trader. Serge, how you doing on this Monday morning?
Good morning, Joel. Good to be on.
Well, we've talked a lot on the show about stocks and the futures and support and resistance levels, but we really haven't analyzed, the big Fed move from Thursday and the fallout on Friday. Uh, Give us your take on what the Fed did. Was it healthy, bringing in a new mandate there? What goes on in the global economy, and what are we setting ourselves up for here?
I think like after the turmoil that we saw in August, we essentially then finished a month with a bump, and then really it was up to Janet Yellen. So we sort of climbed that wall of worry. We saw the S&Ps just kind of creep up slowly and kind of hold those end of August gains for the most part. But I think that the fake out move that we saw on the back of that is actually quite telling. And what's interesting when you analyze these post FOMC moves, you tend to see an initial fake out reaction, which usually lasts, an hour to sometimes even a day or so, and then you get a truer move. And the initial reaction on Thursday was about 45 minutes to 60 minutes or so. We had a basically risk on, and then it was risk off, and that was followed through on Friday. We saw the downward press led by the financials. So, curve flattening all makes sense. And, from this point in, I think we are, the path of least resistance, at least so far, seems to be for another retest of those August lows. And I would argue maybe somewhat below that.
Yeah, everyone's been talking about a retest of it, but I'm thinking if we go down there and retest it, I mean, I might cover some shorts down there, but it's just not going to be a textbook. Oh, we went down, we tested low, and let's go, right back up. I mean, we still are some considerable, distance from that area, so we'll have to see what happens. To me, right now, that 1935, 1936 area, still 20 handles away. I think that could be the key next
Right.
move. I know you've been playing Apple, and you played it from the short side, and you played it from the long side, and you caught some decent moves out of it. Now, boy, this stock is still holding up pretty well here. What's your take on Apple? I wish I'd get another shot at that 116 and change level. You had four tops in a row there from last week, but
Yeah.
114 even here. What's your thoughts on Apple?
It's very stuck. My last trade in Apple was I'm trying to think. I think it was before the week before last where we bought it. Basically, just a couple days before the product announcements, and I just figured we're gonna have some sort of positive mumbling by analysts over that weekend, and sure enough, into last Monday we rallied, and I closed that long, and I've been flat ever since. So for the past 4 days, and I just think the stock is a little stuck here. I'm sure there might be some small trades, but to me, if this stock wants to fall the broader market, I think I'd like to see a daily close or at least a multi-hour close below the 112 area, preferably below say 111.80s to 60-ish. Because if we can hold below there, we're essentially breaking some of those support areas that we've now seen the financials, the materials, and other parts of the market break last Friday. So, Apple obviously continues to be a really big part of things like the Nasdaq 100. And so it's to me a little bit difficult to imagine the broader market selling off without Apple at least somewhat following through on that as well.
Right, and you're looking at that key area, and that's what I have highlighted on my levels as a 6 star. You had your 6 day low at
Mm,
111.76. You opened right there on Friday at 87, and then just bounced, and then just kind of hung out there in the 113 handle for the remainder of the day. So I'm keeping an eye. 114.30, that was Friday's high here with the way the SPOs are weakening. I'd like to see it get back up to that area. But Serge, just I mean, we talked about the market and everything. I mean, a lot of people are losing faith in the Fed here. I mean, it's they bring in a new mandate. I mean, and it's so funny because Dennis and I we kind of like we hung in there. Rates aren't going up, aren't going up, aren't going up, aren't going up, and then finally on Friday we were just like, oh, or Thursday we're like, okay, we finally like gave in. Okay, rates are going up a quarter point, big deal. And then she doesn't do it. You got October. meeting. You got the December meeting. I mean, are they just going to put things off to 2016?
It sure looks like it, but like I have to say, and I'm in your camp, and I kind of over the last week or so, I kind of kept thinking, a quarter point. I'm not going to bet on something like that, but I was thinking a quarter point. Why not? Just to kind of just get it over with. But I honestly think people are making a bit too big a deal of it. I think it would have helped for market sentiment to raise a quarter or whatever. But I think we need to kind of get away from that because it's just an inevitable. They're just going to push this out for who knows how long, and we need the market needs a little bit of clarity. Otherwise, it's going to remain very choppy. Which I actually like it choppy like this or volatile, right? But you know what, Joel? What's interesting to me is the dollar. Look at the dollar index this morning, up 80 basis points after basically reversing last Friday what the damage it did on Thursday. That's quite an interesting move, right? And I actually think a lot of folks that were positioned for a dovish Fed would have thought, okay, yields will go lower, right, as they did. Yield curve flattened, and the dollar would go lower. But the dollar really faked people out on Friday. And I think that's something worth paying attention to.
I don't know if it was last week or the week before. Goldman Sachs made their case for $20 oil here. We've gotten a nice rally off that. Look at this consolidation pattern in here in the crude market. Any comments on crude or any of the related stocks, ExxonMobil,
Mm-hmm.
Chevron, XLE? What's your thoughts in the oil patch?
Yeah. So my latest thought as far as the equities and quite frankly oil is concerned as well. There's a lot of bearish bets out there, and people obviously I like to go against sentiment in most durations, as far as it makes sense, right? And I think in this case, people forget that the energy sector is down like or a lot of those stocks are down like 20% year to date. And we've seen a lot of positive divergence between some of the big ones like ExxonMobil and things like that for some time. And now oil is looking a bit better too. And on the charts, if you want to look at the oil futures contract, you can take the November contract, and you see we really did have a nice little flush below. In August there we had a nice flush right below those March lows, and now we're right back above it basing. And I'd be quite interested in getting long this thing, but I need to see a little bit of follow through buying. Maybe crude can get above 47.70 or something like that and hold a little bit. I wouldn't be surprised if we get back into the mid 50s, maybe high 50s.
Okay, moving on to some other issues here. Financials. Now, financials. They were all set up. Rates are going up. It's good for the banks here, and they really put the hurt to some of these stocks here. Let's start with Goldman Sachs here. Looks like you only got a couple levels here between here and the flash crash low. Any take on Goldman Sachs?
Yeah, so I think we need to take the financials a little bit as a group right now. And I'd be interested to hear your take on that as well. But I think Goldman, you can look at Goldman and Bank of America. It's more or less the same chart, even though they're technically not the same. Goldman's more of a broker in that sense. But basically, it's the name of the game here is basically playing the yield curve, and maybe trying to front run the Fed if you want to play the financials. But I think in the near term, these financials are going to have a hard time reversing those losses from last Friday. If they do, great, right? And I'll be happy to play them higher because I like the financials higher through a 6 to 12 month lens. But in the near term, I think they're heavy. And let's think about what that means for the broader market. I've rarely seen a healthy market remain healthy without the financials participating. We've talked about this in the past. So for me, if this market wants to bottom, I need to see the banks start to do something better, and it's not. The banks have just acted really poorly, basically right after that first hour reversal on Thursday.
Okay, let's. I mean, just with this Goldman Sachs here, you are bearing down on the lows of the move here. Well, the flat. I don't know. Do you like? Do you want to take the flash crash lows like out of your charts and just forget about it?
Yeah, I think so. I think you take a daily close there. You forget the
Okay.
172 prime, whatever that is. I mean, what's your take on that?
No, that's good because Dennis and I have been beating ourselves up about it. 79.46 was the
Mm.
close that day. And really, if you were using that as a level, as a swing level, you were doing pretty good because it really did not spend much time below that. The following day, it hit 77.71. 181, and then it had a real nice rally back into the 190 handle. And I don't know who the goofball, I know who it was. Were you paying attention to Goldman on September 9th when Bank America upgraded it? I don't know if you caught that, and it had closed at 185.88 and actually got to 191.75 that day. And then,
Right.
yeah, and boy, oh boy, you talk about fading the analyst over there at Bank
Mm-hmm.
America. That was one heck of a trade here. But yeah, I mean, if interest rates aren't going up for a while, I don't see any reason to be rushing into these financials. We had some good talk about Twitter here, putting in a hard bottom at 20. Someone wants to
Yep.
own this stock. I don't know who it is. I don't know if they're bringing in a short. I don't know what they're doing. But when you have 5, 6 lows in a row in a 20, 25 cent area, man, someone's accumulating this stock here. I don't know if they're waiting for a new CEO or trying to position themselves for the next quarter. But on the other hand, it's been running now problems. Now you are holding the 28 handle here today, 27.93 low, not much up to 28 and a quarter. Is Twitter finally, going to make a move, maybe get into that 30 handle?
I sure hope so, man. I'm still long this thing. I mean, I've been selling, I've been selling a lot of out of the money puts over the past weeks or so, and most of those have expired. I think actually all of them expired last Friday now. So I'll just long some stock. But I look at it. I think at this point, we can all go out there and try to make a name for ourselves and say, oh, this is happening and that's happening. At the end of the day, the reality is that the CEO search taking on way too long. They're losing credibility, and I think it's quite a joke. To me, these guys need to just from a management perspective, these guys need to really learn something, and they're not. They really are disappointing investors. You'd expect that from a young company, so I think that I'm not bitter about it. Although I probably, why am I clenching my fist? That's weird. Um, but Joel, let's look at it through the lens of technicals for a moment.
Sure.
And basically, what the stock did is it flushed out below those, what was that, May 2014 lows earlier,
Flashback.
in
Yeah.
earlier this year. And so you're seeing a lot of assets, not just equities, and equities across the sectors, by the way, have done this kind of stuff where they broke below some key areas, and now they're giving us this kind of V-shaped thing here. So some of these things, like the indices, I think are going to drop lower, but you're going to see some stocks like Twitter's, and there's other things like oil, for example, like we talked about before, that I think you can start to nibble on. Twitter's a bit of a different story, but I think from an asset class perspective, oil and energy sector, I'm not against trying that alongside at all.
Could you explain your strategy a little bit about selling puts there? I know Steve Sosnick in the I think that's his last name in Barron's. It seems like he's just like repeating the same column every week about selling puts, and and then every once in a while he says, "Well, cash covered puts." And so you just give us a little bit. I mean, it's a great strategy if you want to own a stock. You're not sure it's going up, and actually, if I don't know how far you were going out or what prices that you were able to get in Twitter, but I mean, if you were selling, the 25s, 26s, 27s, the weeklies or whatever, then you're getting a little money in the till, either maybe to go out and buy some calls. I know Nick Shaheen does that, or go out and purchase the stock. Tell us a little bit about the way you do that strategy in Twitter.
Yeah, exactly. So in this is a little bit different. Usually, I have an income strategy that I run in one of the managed accounts. That's basically focused on just selling out of the money call and put spreads, and it's seriously the best strategy I've ever run from an income perspective. It really makes wonderful returns. And basically, this in Twitter is a little different. So Twitter already owned the stock, and I think my entry is like 38 something like that, $38, something like that. So I've been riding it down, but I've been selling out of the money put spreads against it every time, and it really got deeply oversold. And I did a lot of that in the end of August. And so basically, what the thing is, when the stock goes vertical like that to the downside, implied volatility spikes. So what I then like to do is I like to sell out of the money put spreads like 15, 20. Sometimes you can get 30, 35% out of the money and still get really nice juicy premiums. And that's really taking the other side of emotions. And so what then happens is you don't need a big move at that point. The way that the Greeks work, you don't need a big move in the stock in the other direction for that premium to really come in big time, and you get to keep the premium. So you can use it as an extra income strategy if you already own the stock. which I did in this case, or just in and of itself a strategy. I think it's an awesome strategy for income.
All right, moving on here. Just taking a look at some other issues here. I just want to alert our traders just real quickly here, Serge. We had a almost a million share selling balance here in Hewlett Packard today. Just wanted to see here where we opened up. I'm not sure what the news was on it. Little Lincoln Barons, nothing major. 26.18, boom, opened up at the dead low, rallied back to 26.50. Let's see if we could get through Friday's close there at 26.54. Serge, I just wanted to get your comments just on on China here. I mean, that was one of the things, obviously, what Janet Yellen was talking about with global concerns here. I mean, they're basically people that sell or short the market. They're putting them in jail here, and the thing still really can't recover. Is our recovery related to what happens in China?
Well, I think we live in an ever more interconnected world. Just the fact, I mean, let's just look at this morning. Look at the outage in Skype. I mean, it's infecting the whole world. Like the people can't communicate, and I know a lot of companies that literally communicate just through that. That would have never been, thinkable just a number of years ago. And so, yes, we live in a very globally interconnected economy, and I think China is really important. At the same time, I would reference something that Ray Dalio said last weekend or last week on TV, and it's really true. At the end of the day, this is still an emerging country. They're going to make some mistakes. They're going to figure this out. There's underlying growth, which we cannot say there is so much anymore. Certainly not in Europe, and less so in the U.S. as well. But they're going to figure it out. I think it's just a matter of learning it, and we have to deal with that. As part of their big size. So, people want to read all sorts of doom and gloom into it, and yes, it can cause a lot of volatility, but I don't think it's going to drag the world into the abyss through a decade perspective.
Okay, good outlook on that. I know me and you like to go back to some of these old dogs every once in a while, and Chris S in the chat here is bringing up, some of the metals. And I actually, first, I just looked at this chart of Alcoa here, and man, oh man, I missed the boat on this thing. I was thinking under 850. I mean, it did it. It gave you three chances to buy it right around that low from the flash crash, and now we're back up. I guess you got to wait for this thing to get a couple closes above 10 before you can look for another leg up. Thoughts on Alcoa, and then also Chris X is looking to dip his toe into an old stock, U.S. Steel, symbol X.
Sure. So, I appreciate you constantly bringing up my pain trades, Alcoa, Alcoa being one of them. So I did the same thing in Alcoa as I did in Twitter, and I sold a lot of out of money put spreads, and most of those, I think actually also on those, I think everything expired on Friday. So I'm kind of covering my butt there, but basically, anything commodity related or a lot of things commodity related have seen the V-shaped reversals. The difference between the V-shaped reversals in some of these things as opposed to a lot of the equities, including financials, is that through a pure technical lens, you have a lot more. It's a healthier construct from a pattern perspective, and also considering that Alcoa, let's do a little pain math here, was off 52% from the highs in late August. 52%. The S&P was off 13 and change at the low. So, if people get bearish, something that's been bearish all year long and underperforming stocks all year long, that's not exactly going, making a higher probability trade. So I think Alcoa is a buy, through a longer term perspective. I don't think you have to go all in right now, right here. I think you buy this on dips. That would be my thing. U.S. Steel, I think you kind of throw it in the same boat for the most part, except this thing hasn't rebounded yet. So I'd wait for this to stage some serious weekly reversals. This might take until the broader market finds better footing, which I suspect could happen at some point in October. But I'm bullish on these things. These things have underperformed the market for some time. Again, I'm not saying they're going to reverse tomorrow, but I think you have to look at these things as some sort of value plays, particularly since the broader market hasn't really done a whole lot on the downside in the bigger sense.
All right, before we let you go, Serge, we're just hanging up, we're holding up here. Majority of the gain still trading up 7.25. I mean, the levels are surrounding themselves, and in the S and P's, you did breach the major resistance on Thursday, but you came right back down. Support has steadily been moving up in the index. What's your outlook for the week, and what would get you really bullish, or what would get you really bearish?
Really bullish would probably be some sort of backpedaling of last Thursday's decision by the Fed. If they somehow just come out and say they're just going to raise rates, I think that could be good for a trade. But really, on the bearish side, if we take out Friday's lows on the S&Ps, let's call it 1950-ish or so on the downside, I think the we'll open it up towards 1900 fairly quickly. We have options expiration hangover this morning, so I wouldn't really make a decision on a full stomach just yet. But I'm certainly looking to fade to leg into some better short positions here in the broader market.
We've been on the line with Serge Berger. He is head trader at the Steady Trader, investment strategist at the Steady Trader as well. Serge, thanks a lot. Good input. Thanks for dealing with our technical difficulties. We'll speak to you again soon.
Thanks, guys. Take care.